All right, traders, let's get ready to get started. If you guys can hear me, see my screen, you should see the disclaimer. Just let me know if you can see it. If you can, that is great. So you can type in one in the chat, that let me know that you guys can see my screen and you can hear me loud and clear. Just type one in the chat. So we can go ahead and begin. I just want to make sure the recording is working. Thank you, Amy. Hey, how's it going? All right. I think we have one more. This is being recorded. Thank you for that. Hey, Brad. All right, awesome. So real quick, just a disclaimer, just for educational purposes only. Everything that we go over in terms of the top-down market analysis is for your own viewing. This is not financial advice. This is not encouragement to take any particular trades or biases that we go over. This is simply our technical analysis of what we're looking for educational purposes. Be careful with your money. Always use risk capital. So I want to make sure that's very, very clear. So I'm not going to read this verbatim, but I just wanted to make sure you guys understand exactly what the disclaimer for those who's watching this or is currently here live. Okay, with that being said, let's go over to the technicals. Not the technicals, let's go to the fundamentals first, of course. Okay, real quick. So this is this week. Let me go over kind of a preview from last week so that we understand what happened and what's going on this week. So let's go over to the previous week. So the previous week, as I discussed in the last top-down analysis, we had three big central bank decisions, okay? There was three big central bank decisions and we had a non-farm payroll. So it was almost like a big firework show of a week in terms of volatility. A lot of trade opportunities, but again, at a lot of risk as well. So you just have to be very careful in trading around these big central banks decisions. And as I coach and we go over in our coaching team, we know exactly what to do when we see those type of situations. We do three of the four things, well, one of the three things. So we either trade lightly, we trade small, or we trade conservatively and patiently. That's all we do when it comes to big central bank decisions, because the central bank decisions is when the market makers make those big institutional moves that are unexpected, right? Now, after the volatility move is what we do want to trade. We want to trade the aftermath, not the intermath, or at the time the situation is happening, because it's very, very unpredictable, very erratic. And then after that move is what we want to trade, that then the market makers make their intended direction, okay? So those decisions we had started on Wednesday with the FOMC rate decisions. And you can see we did go up 4.75 from a 4.5, which is a 50 basis point as projected. And when that happened, that actually weakened the dollar. And we're going to take a look at that. So on Wednesday, that definitely tanked the dollar. And when that tanked the dollar, everybody most likely probably went short, and it strengthened the market, the stock market, the indices market, S&P 500, US 30, Dow Jones, and et cetera. So that was a shocker, if you will, because if your currency is stronger, that should strengthen the dollar. And in this case, it didn't. Okay, so keep that in mind. And then the following Thursday, we had two central bank decisions, which is the British pound. So we had Great Britain's UK governor. They actually increased interest rate as well. They went from 3.5 to 4. So that's another 50 basis points right here. So at that point, again, if it's strong, that means it should strengthen the currency. Well, we didn't see that. In fact, it weakened the currency. Yep, I know. And then right about an hour later, we had Euro. And they also increased their basis point from 2.5 to 3. So anything as far as interest rate increase for the currency, investors like that, and therefore it should strengthen the currency. That fundamentally didn't happen as well. What? Yep, that's exactly what happened. So there is situations to where, yes, fundamentally, if there's an interest rate increase on currency, they should strengthen. And you should look for that in terms of a bias. That means don't automatically trade it, but you're looking for it. But you also have to look at the technicals to see, is that going to play out likely fundamentally, right? Well, both pound and euro both have increased interest rate, but there was some dovish comments that came out of that fundamentally, quote unquote, that would support the weakness of the dollar. Okay, but technically, that's exactly what the market makers wanted to do. And we'll see exactly what they did technically on the chart to see how they use fundamental news to manipulate and trick traders in situations to liquidate them, okay? So I just want to keep that in mind. And then of course, that Friday, we had the infamous non-farm payroll, right? And then I can share with you guys, and we'll take a look at it, that this right here, which 260,000 jobs created. They're expecting it to go down to about 193. Now that's a huge drop from the previous month. So in the month of December, they reported in January that it was 260,000 jobs created. And then they're saying, well, the economy, a lot of layoffs, then we're expecting, you know, maybe about 193. And therefore, you know, we have a 3.5% unemployment rate. So with that being said, that kind of makes sense. Look, they're projecting unemployment is going to go higher, right? So we're going to go 193 jobless, which is less than 260. And we're going to go about 3.6, a tick higher on unemployment rate. Let's do it. That unemployment rate was lower than 3.6 and much lower than previous. That 193, not only was it exceeded, it doubled the previous. So when that happened, oh Lord, did that strengthen the dollar? That really was what they call a market shocker. And when you have a market shock, you're going to have a big volatility overshoot, okay? And that's exactly what happened in the market. So let's take a look and let's see how it played out technically. Okay, before we go there, let me go ahead and review this week's fundamental, and then we'll go into the technical. So it's very, very important. So on your note, if you have your notepad, you definitely want to make sure you are putting together your plan fundamentally of what is going to be happening on each of the days. So what we teach our coaching students is each of the days, you're looking for the fundamental catalyst that's going to happen on that particular day for that particular currency. It's not to create a bias. It's just to know what currency is expected to move on a certain day, right? So if you're trading every week, you come to a Monday and you're expecting your favorite pair or whatever currency that you're trading to move and it's not moving, you're thinking, hey, what's going on? Well, first of all, you're not in tune with what's going on fundamentally, and you're sticking to your only pairs instead of really sticking to what's moving, okay? So if your favorite pair is not moving, then it's important to know what time should you be looking at your pair if that's the way you trade. So if you're trading a certain pair like US Swiss francs or pound NCD, then you want to make sure you're trading on the day that that pair is going to be moving specifically there, even though you're looking at your favorite pair every single day, okay? So on Sunday tonight, we're not expecting any type of volatility, right? That's Sunday. And then on Monday, we're going to go into the London sessions. So not really much going on Monday. We can expect the normal ebb and flow of the market, probably average ADR, maybe some bottoming tail or whatever. That is happening because Monday, as we know, is trap day. And if you don't know that, then you are the one that's being trapped, right? We call that trap day. But for smart, that's for dumb money. For smart money, we call that setup day. So if you do not understand this piece, this is probably where you're getting a lot a lot of situations. So whatever's going on Monday, it's actually the setup. So if it's looking like it's going up, it's set up to go down by either the end of the day or for Tuesday. If it's going down, then it's a setup to go up, either by the end of the day of New York sessions or the following day. That's Monday. So on Monday, we really don't have anything going on for London. And then for New York session, we got the IV PMI, which is not a big deal, okay? So that is not a big deal. This is when it's gonna be a big deal, right here. That is a big deal. That is very, very important. That is 10:30 Eastern time. So these time zones is for Eastern time. Let me see, 11:30. So about 5:30 a.m. UK time and about 7:30 Pacific time on the West Coast of the States. This is when Australia, well into the heart of Asian session, we can expect some volatility on odd, okay? Now, what we have here is that the odd is right now is at 3.1. They are projected to increase by 0.25 basis points, so a quarter of a basis point. So this increase should strengthen odd, should. It all is going to be dependent on what is stated with the currency. Now, this can be automatically already priced in. It can be a lackluster of an increase, meaning investors would like to see a 50 basis point or whatnot. The thing is, this is the time where you would expect to see Australia strengthen and move. So if you're trading dollar, JPY, euro odd, pound odd CAD, chef, this is the time you want to trade that. If you're already in those pairs, you want to protect those trades if you're in profit. And if you're already in possible losses or in drawdown, you may want to tighten your stop loss just in case the pairs start to go against you in a bigger way, okay? But on 10:30, whatever odds trade you're in, you're gonna want to make sure you either get ready to set up to get into the trade or after the move, or protect your positions if you're in, okay? So that is Monday night, 10:30 Asian session. So whatever time zone that is for you. Okay, so let's move on to Tuesday. So that's Monday, odd. So Tuesday, we have this week, probably the normal ebb and flow, meaning normal ADR, average daily range for these euro and pound pairs, right? And then we're gonna have at 12 o'clock noon Eastern time, we're going to have the Fed to be speaking, and then we're going to have the governors make them speaking, okay, at 12:30. Now, this is clearly after London session, because London session, this is about, 6 o'clock by that time, 8 p.m., and they're already done. So we're going to only have a quarter of the volume in the market. So don't expect a lot to happen across the Forex pair, but for indices, it will be an impact. We're talking about US 30, S&P 500. This would definitely have an impact on the afternoon. I would say the afternoon run. There's always one afternoon run on US 30. So if you trade US 30, be ready to see some increased volatility right around 12 p.m. Eastern time. And that'll be a good time to take a nice trend, right? There's going to be a nice trend happening around 2 o'clock, February 7th at 12 p.m. Make a note of that if that's what you trade. Okay, now going on to Wednesday, not really going on. It's probably during London session. It's going to be probably boring. There's not a lot of movements. We won't see a movement until about 9:15 a.m., which is just before market open at 9:30. So expect some volatility on indices, not so much on the dollar. We won't see probably much for this day on terms of dollar. It's just going to be the normal ebb and flow. There's nothing erratic like FOMC, rate decision, CPI, or PPI, anything like that. These are just a bunch of speakers, bonds. So expect some volatility. Wednesday, we know as FX Prosperity coaching students, this is reversal Wednesday. reversal Wednesday. So basically whatever happens on Monday, Tuesday, most likely, look at your technicals. You're going to look for areas of confluence, of support or resistance, whatever way it's going, order block and order flow, to see if there's going to be a possible reversal on Wednesday. And that's where you want to be aware of. You got to know these days. You got to know the ebbs in the market. You got to know the market's order flow. It's basically on schedule almost every single time. And if it doesn't happen on Wednesday, guess what? It most likely will happen on Thursday. But whatever you do, you always have to think, you have to look for some potential reversal or pullback on the midweek. So most likely it falls on Wednesday, sometime it falls on Thursday, okay? And that's going to be it for Wednesday, nothing big, okay? So far we got one big news. That's on Monday night Asian session going into Tuesday session. And then on Thursday, we do have a preliminary, I would say, serious news. This may move the pound around 4:45 p.m., right, Eastern time. So we will expect to see some volatility on Thursday for euro and pound. And then around 8:30, either we see a continuation or we see a pullback, and that would be the unemployment claims for the dollar. This will move the market. Not crazy, but it will move the market and take it to another level, right? So right now they're looking at about 103, and they're looking about increased unemployment claim to about 91. Based on the previous non-farm payroll, that does not look to be the case, right? I don't think it's going to be high. I think this is going to be lower, and therefore there's going to be some disappointment, and that's going to be something to be aware of. So that will move the market. Expect a lot of volatility on Thursday on these pairs, euro, pound, and the dollar. And all the dollar crosses when I say dollar, okay? And then on Asian sessions, we got the Reserve Bank of Australia, their policy statement. That might have some volatility on the market as well, okay? Okay, moving on to Friday, we have GDP. This will be big on Friday at London session, right at 2:00 a.m. Eastern time, which is Frankfurt open, or right at about, I think that's 6 a.m. UK time, and that is definitely around 11 p.m. Pacific time. So expect to see some volatility around there, and that's going to kick off pound, some serious pound news going right into London session. Okay, about 7 a.m. Okay, perfect. So 2 a.m., that would be 2 a.m. Eastern time. Again, that's 11 a.m. Pacific time, so that's 7 a.m. UK time, going right into London session at 8 a.m. Okay, and then right later on at New York, we will have employment report for CAD. This will be heavy, okay? Now, as you noticed last week, CAD's been beat up. So CAD's been taking some serious hitting in terms of the CAD weakness. This right here may be the pivotal point as we start to lead into CAD. This may start to be a strengthening week of CAD, so look for that, okay? The oil has starting to show some signs of strength. We'll take a look at that, and then you'll start to see that if the oil, US oil start to be stronger, then we can start to see some evidence to possible CAD strength. So whatever CAD pairs that we'll take a look at, if you'll see how it's been beat up, we may start to see a pivotal point this week with CAD strength. So if you're a CAD trader, or if you're in CAD trades, I do trade some CAD trades. I will go over that, and we'll see how the technicals are looking if the CAD strength come in this week, okay? And then we'll finish off at 10 a.m. With some preliminary consumer sentiments and things like that that may move the market, kind of give it a last push. Definitely will affect indices, US 30 and so forth, okay? So that is that for this week. So the biggest one is pound on Friday, CAD on Friday, and then we have Australia bank rate on Monday night, Tuesday session, okay? So this right here also may start to strengthen CAD on Tuesday. So this is what I'm talking about. So you got the Bank of Canada governor, central bank governor, Macklem. He may come in and say some hawkish things for CAD, and that would start to strengthen CAD possibly on Tuesday. And then on Wednesday, we have the crude oil inventory. So when that comes in and you'll start to see strength in oil, then look to see CAD strength, and then look for CAD strength to come in by Friday as well, even more. Okay, so that is the fundamentals. Hope you got on your notes to look for which currency pairs at about what time for to see some volatility in the pairs that you're looking for. Okay, so let's go ahead and go to the technicals. As we always start, we start with the dollar. Again, this is recorded. You can always come back and make sure you take your notes. We're going to go to a higher time frame. We always look at it from a daily, weekly, monthly. When we get into the 4 hour, 1 hour and 30 minutes, all the way down to the 15 minutes, is when we get into our live trade room to take a look at the trade execution. Okay, starting with the dollar, this is US dollar. And let me take a look at the monthly real quick. As you can see from an overall, this is 2016, 2017 high. We came back down, came back up. This was around March 2020. We had the pandemic. We came up, did 100% retracement, had a change of character on a higher time frame, and boom, it shot up, scared everyone. Everyone started crapping in their pants, and no one's keeping faith, thinking this is going to go to the moon. But everyone else in our traders knew this was eventually going to come down at least 50% from this swing to that swing, and look what it did. It came back down 50%, right? So it came right here, had that swing high, and boom, we're right there at a very pivotal point, high ironic, right? So we had that high of 2016, that high of 2020. We exceeded that, came up, created this high, and came back right back down. Now what, right? So now that's what we got to take a look at in the lower time frame. Let's go down to the daily so that we can see what happened this previous week. So we can see we had this small wedge. This is on a daily. We had the small wedge starting on January 23rd, right? So on the last week of January 23rd, this thing is going up and down, up and down, up and down. We're scalping it, right? So you got the lows, you got the highs, and it's going into a triangle wedge here. Now let's take a look about what actually happened. We had this shoot up out of the wedge. We had this breakout, and this got a lot of traders thinking, hey, we're going to go long. And it created liquidity, came back and came right back down. This right here is Wednesday, February 23rd, right? February 1st, 2023, sorry. So this is the FOMC rate decision, and look what it did, boom. It broke out the wedge and it came down, and thinking, what? We are going short because we thought we were going long. So it trapped a lot of traders going long, came back down and trapped a lot of traders going short. And then it went a little bit lower. It created a previous daily lows of 100 on the dollar. And then right on Thursday, we almost faded more than 50% of this move, right? So we went right back into this wedge. So a lot of traders at this point, it's like, oh my God, so what's going to happen now with non-farm payroll? And hopefully with non-farm payroll, we are going to go back down. When we took a look at the lower time frame, we said if this thing breaks this high, we are going higher, because on the lower time frame, you can see where it started to create a low, and it bounced right off of that, right off of this wedge, right there. On a lower time frame, you can see it where it started to come down. So we saw it the next day. We saw this pair. We saw the dollar crosses start to strengthen, right? And then this is the dollar inverse. As this dollar is weak, the dollar cross is just taking advantage of the weakness. And we saw it go right here. And then in our predictive software, we saw that this is the predictive low, and this was the predictive high. And sure enough, boom, that's what we got. And that was non-farm payroll, okay? So now that we are broken this high, what's next? So we are looking for possibly continued weakness, continued strength in the dollar, right? So that is what we're looking for. Obviously, that's inverse correlated to gold, inverse correlated to the indices, inverse correlated to the pound and euro and everything else. And as us traders, we can only look at the previous past price actions and looking at order flows and using smart money concept to really kind of predict what the market makers are trying to do and see what they're trying to play out versus what we're seeing fundamentally, okay? So real quick, let me point out, there is a strong order block here and we just mitigated that right there, did we not? We did, right there, boom. So that's clear. Now what? So now we have this order block sitting right here. It's a very strong order block, and it's a very, I wouldn't say very strong, but it's an order block here. We have an imbalance here, right? And it's possible, it is possible that we could come up here, but I won't call that right now. So here's what I'm saying. We are most likely are going to see this move right here. We're going to come up, we're going to mitigate that. And at that point, we could come back around this level because we have an imbalance sitting right there. We could come back, we could hit this right here, and then possibly come right here. So as of right now, I'm calling this a high probability. And I'll give you guys the prices so you guys can kind of mark that on your chart. So we're looking at a high probability of mitigation to this level. And that means Euro USD, Pound USD, yep, we'll be looking to be coming down, okay? And that's a medium probability. Oops, go ahead and repeat that. So medium probability and high probability, because that's what we can say. We can't really technically say this is going to go here. We know that for a fact and absolute. And because Linda say so, because we say so, or whatever, it does not freaking matter whatsoever. The market is always right, despite what we think. We can only take a best estimate and give it a high probability of what we believe based on the technicals of what we experience. So we have a gap right there. We got a small imbalance gap right there. That's called a fair value gap. We had a bunch of sellers coming in here, not a lot of buyers opportunity to get in here, and it created that gap. We are going towards that mitigation right there. And let me show you what I'm talking about. There's an imbalance, though. Well, there was an imbalance sitting right there. Did we mitigate it? Absolutely. We got one sitting right there. Are we going to mitigate that? Most likely we are, right? Dollar is strong. We can expect more strength. Economy is showing strength in the economy. And we're saying that because of that, the Feds are going to need to continue increasing the rate, if not consider increasing it even higher. The next interest rate is expected to be around 25 basis point according to the CME board. So let me show you what I'm talking about, not just talking out of my butt. So right here on the next FOMC rate decision on March 2022, according to the CME group, all of the INC, Goldman Sachs, Bank of America, and all of the institutional players are leaning towards a 25 basis point increase of 82.7%. versus just the regular stay where we're at, right? 17.3%. So there's a high probability we are going to see an increase. Now, because of the strength of the economy, low employment, a lot of jobs, inflation is still kind of high, the Feds are going to have to continue raising interest rate. More importantly, they may need to consider going a little bit higher. If not, to continue to raise interest rate and keep interest rate kind of higher to slow down the freaking economy because inflation is still high, jobs growth is strong. So everything economically is showing that we have a very strong economy at a very high inflation rate. It's not good, right? They are far from getting back down to the 2% target. We're sitting over at 6%, over 6.7% based on the last CPI inflation data for the US, and it's still kind of high. So that is not good enough. So that's why I'm going to say, because of that, fundamentally, we can expect to see more dollar strength to at least play out this mitigation from the high probability of about 104, right? So I'm expecting dollar to come up to 104 from its low 100. And then once it come here, we'll take a look and see where we're at. This is going to probably take the rest of this week, and then we'll come back and see if it's going to come back. Obviously, we're going to have a little bit of pullback. It always does. To see if we reset, trap a lot of traders going long, thinking we're going to go longer, pull back, might be some other catalyst. We'll take a look. And then if anything, we may even come higher, but we'll take a look next week to see if what this pullback will look like and see if we're going to go higher or we're always going to be in this range before we go lower. Okay. So right now, as a result, I am bullish on the dollar strength. Okay. And this is what we're looking at. So let's look at the gold, which is directly inverse correlated. So we're going to look at gold for those who trade gold, trade metal. This is very, very important. Okay, let's take a look at the higher time frame. Take a look at the monthly so that we can clearly see what we're looking at. Now, as you can see right here, we did go as high right here. Back up. Yeah, okay. We went that high. Then we, this was the high of September 2011. And then we had the Russian-Ukraine war that came up around, let's see, no, that was the pandemic. So we had this in 2020. And then right here in about January 2022, we had the Russian-Ukraine shoot that up and it came up to an equal high, right? So we were right here. The Russian-Ukraine situation happened last year around, I want to say about January, right here, January 2022, and boom, that shot up in literally 2 candles, right? And now we came all the way back down. We came down to this low, right? This is where it's supported, and it's kind of like reached somewhat incongruent for here, and then it came up and it bounced up, and it looked like we were going back towards that high. So let's take a look at the lower time frame that is on the monthly. Let's go back down to the daily to kind of look at that fractal, and this is what we're looking at. So what we saw here is a couple of things. This was the high of that candle, okay? This was a high of about 1997, and then we had the previous high, which is when the Russian-Ukraine pushed it up to that equal high, way up here. And that was a high of 2069, which is the all-time high for gold, okay? So we had that high, and we had this high of 1997. Now, what you probably don't see is kind of shaded is the order block, about right there. And we came very close to basically mitigating that, okay? Now, with that situation, and I'm gonna go ahead and put that order block way back up here. We got an order block sitting right here. Very, very strong order block. We have a very weak order block right there, which is basically making sense all the way over here, okay? So this right here is supply. This is supply zone. This is where you want to sell. That is the supply zone. That is a strong resistance area, and we saw that, right? We had the FOMC rate decision took it down, and then it faded, and then it went a little bit up, and then non-farm payroll, boom, took it all the way down. So we are right now at that order block, okay? So right now, what I'm expecting, because of the continuous strength of the dollar, I'm expecting more weakness on gold. So here's what I'm expecting. I'm expecting to come a little bit back up just to mitigate this little gap right here. We got a gap that needs to be mitigated. We may see it come back up, maybe about halfway, but look for a mitigation pullback to some degree, right? So I'm gonna put 50% there. And if the dollar continues to be strong, which I'm projecting, we could come back down and see that level right there, which is around 1800, okay? And then after that, we would need to look at, and now we're talking this week could come down to about 1841 in this area. This is a very strong order block area. So we may, you know, never know. We may come down and we may range in this area before we come back up. And the reason why I said before we come back up, are you stating that we may see more bullish in the future? Absolutely. And for that to happen, obviously, we're going to need to see dollar strength, dollar weakness. I do expect to see dollar weakness in the near future at the pivot pause. The pivot pause in terms of no more interest rate, they're going to pause it, they're just going to hold. And that's when we're just going to see the dollar just start tanking, right? That's when we should start to be bullish on gold. As of right now, dollar's pretty strong. And I think we should ride this accordingly and wait for more gold bearishness and more fall into this zone, possibly even lower. So right now we're about at 1865. I do expect a little pullback as we see a little bit of a big gap sitting right here. And when you have that gap, that's a third gap, there's a big imbalance. We had a bunch of sellers, no buyers getting an opportunity. So I do expect a little bit of a pullback, possibly to about 50% of that mitigation, maybe more. It could come all the way back up. I wouldn't be surprised, just be aware of that. But when you see that pullback, don't get that mistaken and say, oh, this is an uptrend. Always look at the dollar to see if the dollar is showing that equal amount of weakness, okay? If we're not showing that much of weakness on the dollar and we see just a little bit of strength on the gold, then most likely we're going to see lower prices. So this is more of a lower low, lower high, lower low, right? The point is how low. So once you get into this order block, it may start to struggle, it may start to hesitate, and it may start to look a little funny or kind of weak. So when it comes down, it may look like this, and it may touch it before it comes back up. So just be aware of that, right? So we're looking at possibly a more lower low on gold after this mitigation pullback, or a little bit of a pullback, and then come back even lower into this area. I wouldn't be surprised to see gold come all the way down to around what we have around 1800. Okay, ooh, that's kind of a big hit coming from the highs of 1959. Of course, people like to see more gold prices, which is great. But since the dollar is strong and it's starting to gain more strength as the economy is just showing strength of, very strong signs of the economy health. Therefore, we need a more higher interest rate to lower lower inflation. I hope that makes sense. So right now, I am bearish. I would look to sell gold. However, do not sell gold right now, right? We know as our traders, we do not, as a rule, we do not short the lows. You wait for the pullback, you wait for some type of pullback, and then you short it, right? And we need to see that. We're not going to short that low. We're going to see the pullback, and then we'll short it again, and we're going to see if we see a double top, a double bottom, or we see more lower prices. That's what we're looking for. As of right now, wait for the pullback and then look to pull the trigger in the lower time frame. So in our live trade room, we look at those predictive highs and lows, and we provide that based on our artificial intelligence resource that we use. And we'll take a closer shot on gold at a lower time frame. Okay, so let's look at the S&P 500 market, which is also inversely correlated to the dollar. And let's take a look here what we have. So real quick, let me mark this up. We did have a nice trend, right? About right there. This is on a higher time frame on the daily. And we were looking at this market, right, in terms of where it's going on and where it's going. And we saw this bottom tail right there. And we said, listen, if the market comes back down to revisit that, there is high likelihood we may come to this area right here. Right? Because then we're going to be in a serious situation of the market, since we've been down from the all-time high on the S&P 500. On the S&P 500, we've been down all the way down to 1361, down 28% from the all-time high on the S&P 500, which is freaking bad. That's a down market, right? So we look to, we were looking to see if we were going to see a break of that time, that breakout right here. This was back in December last year, and we saw the quite little break, and then we saw the downturn. So when this downturn came down, it created this low here, kind of an equal low around this market, and that's when I said, very, very interesting. It's holding right about at this level here. Put that down about right there, right about 37.94 in S&P 500. Now, this is kind of correlated to US 30, so it's important that as we follow one market, you can kind of get a feel of what's going on with US 30 and NAS 100. So when it came back down, we created this and we bottomed up, created this little W pattern here on the daily, came back up, touched this, pulled back, and then we shot back up. We broke this on the Wednesday. So on the Wednesday, we created this high on FMC rate decision. So then it came back down, it faded that move, and then it shot back up, right? On non-farm payroll, this is on Friday. So on Friday, we saw this move come all the way back down right here. Let's see, this is February 3rd. So this move, let me zoom in a little bit. So yeah, you guys can clearly see this fractal here. You guys can see it right there. We created this high on, this was on the previous day on Thursday. So this is Thursday, this is Wednesday, FOMC rate decision. And then went a little bit higher on Thursday. And then right here on non-farm payroll, boom, it took it all the way down. So what we had is a situation where price came all the way down, but right there, it came back and closed right there. Okay. Now there's a couple of things that we need to be aware of. So now we have this, and if we're expecting dollar strength, what do we think is going to be happening with, if we're expecting dollar strength with the inverse correlated of the stock market, of the equities market? We're expecting more weakness. Okay. So what evidence do we have that supports that? Well, there's a couple of things. Right there, we have a gap right there. That is a fair value gap or an imbalance in the market there. And we have another one right above it. This is on the daily. Okay. And on the volume profile, we have the upper outlier, we got the bottom out of pocket here, and then we have the point of control right there in the middle. And so there's a couple of evidence that sells us right here based on the order block, right? We have an order block strength right there, and we have another order block strength right there. So with that being said, here's what I'm projecting. I'm projecting to see the indices market drop. So high probability, you can see lower prices on the stock market, start to show some signs that says, ooh, we may be going into a recession. Hello, right? And then because we're going to be in high interest rate for quite some time, guys. What if I tell you that we may see high interest rates in the US for the next year and a half, right? I don't think this is going to go away. So this is going to be a year of high interest rate for all year long. So we need to see more decline in housing sales, more declines of economic sales, of sentiments. We need to see more credit defraud. We need to see more job losses. I know it sounds counterintuitive what we would want as a normal human being, but when it comes to stock markets, that's what we need to see when it comes to the economy, right? Yeah, it's no way it looked like it's slowing down anything. So the Fed need to do something that says, hey, we got to turn this economy down or we're going to get into a really serious situation, right? So they need to do something. And of course, what they have is their interest rate. Okay, so right now I'm looking to see more bearishness. This is what I'm looking for. I'm looking for this to come down to about right at this level, which is about 4,000. Let's say this is about 4,000, about right here in this area, right? And then we may see a little bit of a pullback. Obviously, we're going to be in this order block, and then, believe it or not, I am expecting to see this. Yep, before we come back up. Okay, so I'm gonna keep this right now. I just keep that low. And why am I saying that? Again, we got a couple of evidence right here. We've got a very good strong order block here, very strong order block here, and we have some imbalances here. So from a smart money concept, there's some mitigation that has to happen. And if the dollar is strong and continue to be strong, this is probably the high for now. And for the next month or so, into the next CPI data, and for the next 2 months, so basically the first quarter of the year, we should start to see some type of decline. If not, there is a serious situation, and the dollar is going to continue to be strong as we start to see more and more downside. I don't think we are going to come down here. I don't believe so. We may not. I wouldn't be surprised though if we get turned down to this level and we don't start to see some type of bottom and tail here and start to see some accumulation here back from this trend line, right? This trend line. If we don't see a break of that, then we may be on a cover recovery here. But this right here, believe it or not, may take the next 1 to 2 months. That's the next 1 to 2 months move. That's what I'm projecting. Okay, so let me go into the higher time frame. Let me zoom out here, because we did come out and we did have this equal high, which is great, right? And it looked like we were about to go ahead and go to back to the all-time high, right, for S&P 500. And if we do that, that is a full market recovery. Are we there yet? Do you think the market is ready for a full recovery with high inflation? Low employment rate, not even close. That is not a full recovery. Not with high inflation. This is not going to happen, right? So we need to see low inflation rate before we even get onto the road to recovery. So this little bull run that you saw, this little breakout right here, enjoy it, because that was a fake out. The economy just can't keep going back, and stock markets start to flourish, and we're back to an expansion at a high inflation rate. That's what? That didn't even make sense what I just said, right? We can't be an expansion at a high inflation rate, not with high interest rate. That's not going to happen, right? So I got to say, I'm banking that we're going to be coming down to this area right there. X marked the spot. Okay, now, do I know for sure? Of course not. Do I have a crystal ball? Of course not. Do my experiences in technicals and fundamentals says it most likely could go there with a very high probability? Absolutely. Absolutely. And I'm gonna milk every single percent of it, right? And every one of our coaching students will do it as well. So we're looking for this area, and we're going to see this area of confluence, and then this is our point of interest. High probability we're coming down here for sure. We've already got a couple of imbalances that I just covered. So S&P 500 come down, that means US 30, yep. Nas 100, yep, come on down, right? And then we'll probably see a slight pullback, probably some freaking hawkish US data or whatever, and then boom, more weakness, right? So I think we're going to come in this area. I don't think we'll come down this low, which is 37.94, right? Because if we see this low, ooh, this is going to be bad, right? So that is going to be the case to see what happens when price gets to this area. And I'm saying that like I know it's going to come down. I don't, but there's a very high probability, as I stated. If it breaks that and we start to see price come down in this area, oh, Lord and behold, I think there's going to be some shaking heads going, oh my God, we're in dire straits. And if it breaks, yeah, we're going to come down. We're going to see equal low. And then I would say, yeah, inflation start to come down, and hopefully it does come down around this area. We'll see. And then I'll be looking to take it long. But as of right now, there's no way in hell you're going to see me buy it right now. I don't think it's going to come down up here at all. Nope. Didn't come down at that high. The dollar has to continue to be weak. So right now, more bearishness. Let's come down. S&P 500, Nas 100, US 30, come on down. And then we're going to see what happens here. I might see a small pullback, and then we may see lower prices, but we'll see by the end of this week. Okay, so right now, S&P 500, all the indices, equities market, I am bearish. Okay, let's look at the other one, which is Bitcoin. Bitcoin is the other inverse correlated dollar. Hope you guys are taking your notes, creating your plan here. what is going on with Bitcoin. Now, you guys remember, I talked about Bitcoin and I said this is the way Bitcoin works. It goes into a trend, right? I'm not sure why my marker is not showing up because I had this all marked up. And look like there some way somehow got deleted here. So it was in that range right there. And then Bitcoin was in this range. We're talking this range way up here. Right? Because this is how Bitcoin works. Bitcoin ranges, breakout, ranges, breakout. Okay. Mark that up. Give me a second here. I'll mark this up because I'm not sure what happened. I had this all marked up and then. So for those who like to trade Bitcoin, I'm telling you, we're going to be on a bull run. When that happens, that's going to be nice, right? We got the Bitcoin halving coming up in 2024. So we may see a little bit more bearishness. Now, the reason why I'm marking this up, I want you guys to see this because this is how Bitcoin works. It goes into a range and it breaks out. It goes into a range, it breaks out. This is a long range. Then we saw a slight bullishness. Now, obviously, this is a Bitcoin winner. Clear and simple, right? But now take a look. We broke out. And what range are we in? Are we in this range? Or are we in this range? We're in this range, pretty clear. We're basically almost to the height of that range right there. Where Bitcoin almost came close to 25. I think we came close to about 24.2. Not bad. This is on the Oanda exchange, not Coinbase. This is on Oanda, so slightly price difference. So this is 25. And it went as high as 24. So that's about as high as we're going to see Bitcoin go for now. So with dollar strength, this is the point of control. This is the outer limit on both. I'm expecting Bitcoin to come on down. Now, do I expect Bitcoin to come all the way down back to the previous bottom of this range of 19.2? No, I don't expect Bitcoin is going to come down this low. I mean, it made a nice push up to afford it to come down a little bit. So there is a strong order block sitting about right there, right below the point of control. And this is a nice area that I do see Bitcoin coming down, okay? Can we say that we possibly are out of the lows possibility below 1900? I can feel confident. I can feel confident to say we probably won't see the lows below 1900 as of right now. So signs are showing that it's a pretty strong bullish move. This is a very big higher high, very big. So after high is high, and if we're in an uptrend, we're expecting to see higher low. Okay, so let's look for that on a higher time frame. That's what I'm looking for. Yep, I'm looking for Bitcoin to come on down, right? So come on down, and I see it come around this area. I would say 21, 20, 21.5, 21, about 2,000. Not that low, maybe about in this area between 21.5 and 20.25. $20,000, 20,500 and 21,500, somewhere in that area. Okay. And then we're going to probably be doing this again. And then we'll probably break out. Okay. So I do expect Bitcoin to be coming back up here to around the $30,000 level. We'll probably be in this little thing right here while the dollar and the indices work itself out with the Fed, and maybe the next interest rate we see in March, we see this breakout. Okay, or we may see a little bit more bearishness around the March time. So this is what I'm saying. So that next FOMC rate decision is in March. We're going to have a non-farm payroll, obviously, before that, March 1st, but March 23rd, we're going to see the next FOMC rate decision. So I think it's important to know that we are going to not see this bullish run again for about another month. We're going to probably come back down, dollar strength, and this is come on down, and we may see this little bit range. We're going to stay in this range, which is good, before we see Bitcoin break out of this range. Okay. So if you're a hodler, hold on your Bitcoin. If you're looking to get into Bitcoin, wait till prices come back down, right? If you didn't buy down here, shame on you. if you sold your Bitcoin down here, shame on you even more. Come on, right? Buy low, sell high, right? So if you bought down here, great. If you bought here and you bought more, then that cost average is great. If you bought up here, it's a good opportunity to buy some lower prices here. If you didn't get that chance to buy here because you were worried about even going even lower, well, it shot up. Wait for it to come back a little bit down. We got a little bit of balance here, maybe a little balance here. We may see the bottom of this, but I don't think we're going to break below the 1900, but we may be in this range a little bit. And about March, boom, we shoot back up, right? So I would say mid-year, that's kind of a long-term outlook as I stated in the early year. We're looking by, mid-year, we'll probably be around this 30,000. By year end, it could be back to about 40 grand, right? Because my projections, it's telling me based on his history of Bitcoin, right? You can go back to the kind of a yearly outlook. At the beginning of Bitcoin, we saw this here, we saw this rise here, and each time we saw this rise, it was a halving. We came back down. We're going to make us way back up, and we're going to see 60-some thousand again. Do I believe it can go higher than that? I do. We may see potential 75, and that whole crazy, 100,000 people have been talking about, right? And who knows, right? It's all speculative at this point, but that could be the future of Bitcoin in terms of the value. And a lot of people right now, because the market has starting to show some signs of recovery, a lot of people are starting to get in to take notice as, hey, right now is the time to get into Bitcoin. Right now to put a piece of your portfolio, a piece of your investments into Bitcoin to start to see the increase of Bitcoin and take advantage of that. We're talking, think about it. If you would bought Bitcoin right now, we're talking about a potential 97% increase on your investments, 154% increase on your investments, damn near 200% increase, triple your money based on your investment. You put $100, see a triple investment. You put $1,000 in Bitcoin, hold that, and take advantage of the equities increase. You're going to see upwards of 150% more for full recovery within the next year or two. 200% increase. Okay, all right, hope I got you guys' attention on that one. All right, so that's Bitcoin. That's what we're seeing technically, and we'll start to see more of that. All right, let's get into oil before we get into the Forex pairs. And I just wanted to show some bearishness because this is going to support what's going on with oil, okay? I did talk about this last year. I mean, not last year, last week. Oil has been in this range right here. So it's been holding in this range, and it's been going up, it's been going down. So it's been kind of crazy. Yeah, that's Canadian strength, Canadian weakness, Canadian strength, Canadian weakness, Canadian strength. And then what do you think what was going on for the past week? We've been seeing this Canadian weakness, right? But the good thing is this, we are starting to see a trend line right there, about right there. Starting to see that trend line, support. So I'm projecting that if we probably won't see this right here. I don't think we're going to come down to this 70 level. We saw that was already there. That was mitigated. This is that order block way over here. And we got an order block sitting right there that's having a hard time breaking that. I don't think oil is going to come back up to $90 again, but I think we're going to be in this range a little bit more, guys. This is what I'm saying. I think we're going to come down, come up, we're going to come down, we're going to come around this particular area, and I'm looking for this. Yes, I am bullish on oil. So if you like to trade oil, then good, you're in good hands, because I do expect to see some oil strength coming in. So anywhere between, if we don't break below 72.5, which is the equal low, right there, let me see. If we can consider it equal low right there. So this is equal of 72.5. If we don't break below that, and what I mean by break is the full candle close, then we're going to see right here at 70, right? This could come down. It could. So if you were swing trading this, obviously you would just take a buy now, get ready to put another buy and cost average this in, or that would be aggressive, or you can wait to see. Obviously you want to see which we don't want to do, right? We don't want to short the lows. What you want to do is see a uptrend, kind of a higher, a high, and then you want to see maybe a higher low, right? This is where you want to get in. As long as it doesn't break that, and then you can take it higher, right? You want to see that. And to show exactly what I'm talking about, just to demonstrate that, this is what I'm talking about previously. Right here, you saw that low. You saw a little bit stall, and it came down. That's where you take that trade. That's what we're looking for. We're looking to see a higher high, some kind of candle, higher high, come back down, fail to take the low, and maybe create a little bit higher high, higher low. And then that's the trade you want to take. And let's take this back up. Okay. So right now I am bullish on oil. I'm seeing it. I want to come back into this area right here around the $80 range. Okay. So oil is looking pretty good. If this goes higher, you know what that means for the CAD, folks, right? We got CAD GDP coming up, CAD employment coming up. So look to see some CAD strength. Hopefully the governor start to talk some hawkish comments around Canada, and then hopefully we'll start to see a little bit of some strength here. Who knows? If we take this low, then we're coming down here, and then hopefully, employment for Canada shows some really good strength, and boom, strengthen the currency, which will strengthen oil. Okay, all right. Let's get into the currency pairs. Hope you got the understanding on the dollar and how it impacts the euro. So let's start marking up like a chart here. This is the euro dollar. So we had a nice order block up here on a euro dollar. Right there. There's nice high right there. Nice order block. Very nice order block. Came back to it went a little bit higher than expected. I was not expecting to go that high. I was expecting it to go about that high. And it did and exceeded that. That was that. We had this one candle that kind of went up and then it shot down. That was the FOMC decision, right? And then it went back up, faded that whole move, and then that whole non-farm payroll. Right now, since last week, I was telling people to short. Now people are probably saying, man, you said a short, and that thing went higher. Yep, then you should have shorted that again. That would have been 2 entries. Could have held that, take that down, baby, and you would have been in profit. You see what I'm saying? So what I'm saying right now, again, if you would have took that short right there and held it, and then the thing shot up and scared you, you take another short. You would have been in positions twice if you would swing trading this, right? This is, I'm talking to my swing traders, not the scalpers, to my swing traders. You take a short on Euro USD right there, and then you take another one when it popped up, and now you would have been what? In profit. This would have been profit, this would have been profit. But at swing trading, swing trading, day trading, you're basically into drawdown. Of course, you have to mitigate that by just holding your trade, but you would have been in profit. Now, if you're scalping, it's a whole lot different story. Whole different story. We're going to a lower time frame to do that. So with that being said, what does it look like, guys? What does it look like? Going higher, going lower, because you did not buy up here. Do not be the retail traders. Do not be that retail trader. We are not buying highs. We didn't buy highs here. We ain't buying highs there. And we definitely didn't buy highs there, knowing that we had this order block way up here, right? Should have known that. This is not what we're doing, right? All of this area, believe it or not, is supply. Supply, plain and simple. Supply. Now, if you're scalping it high, that's a different story. But long term, you're looking for that reversal, right? And or if you're scalping it, you're actually scalping with the trend. You're going higher. But then hopefully around FOMC and non-farm payroll, you did not get into those trades because you would have been taken out. And all that gain you would have gone, all that gain would have been wiped out. That's what retail traders and scalping does when they scalping and not paying attention to the higher time frame, right? And then you get this little non-farm payroll take you out and take all your gains, right? Take all your gains, and all that work was for nothing. You got to be smart, right? You got to be smart. So what we're seeing here, let's see. All right, about that. Let me go ahead and raise some of this marker up. So we have an order block sitting right here. You got another one sitting right there. Let's support this. Right, we got that. That support that area right there. Now, I don't think it can come all the way down to 103. That would be insane. I really would. But it's definitely a high probability. We're coming down to about about 105, 106 area. Okay, definitely high probability we're coming here. Oh yeah, make sure you mark that on your chart, because with the dollar strength, that's the only probability that can happen when it comes to dollar strength. We're going lower, right? So we're looking at about 106, 105, 6, no lower than 105 even. So in this zone. In this zone is when I would start to be looking to go long, right? If I were to day trade this, I would definitely have an area of interest to say when price starts coming here, I'm looking for evidence for price to start, start showing some signs of pause, maybe a little bit higher high and pull back, and I take that right there. I'm looking for that W pattern right there, double bottom W pattern, because if we start to blow past that and it start to look bullish and everything else on the dollar starting to look strong, guess what? Yeah, we're coming down here, and it's going to be 103. That would be the area of interest that this thing will come down to, but I don't think we're going to come any lower than that. And what's the next target? The next target would be about right here, this order block. That would be parity, right? Coming down close to parity. So all that move that we just had, this bull run from all this bearishness from 2022, basically just got faded. I just don't see that happening. I just don't see that happening. Not right now. So if I put the swing low, swing high area, that's that 50% of the premium and discount. This is what we're looking at about right there. And I got that as a medium probability, but I got this as a very high probability. So in other words, if you what to do right now, like what would you suggest? I'll be looking at short. I'll be looking at short Euro USD. Take that down, and we're looking at about 106, 105. That's what I can see right now. Once we get to this area, then we need to see more evidence if we're starting to see an area of possible reversal, or are we going to see one more push down to about 104 before we go back up? Yes, we will see back up to 114, 115 area, 110 area in the near future, because that's going to take some dollar weakness to be able to do that. But as of right now, I don't see that. I see that coming down a bit lower. Okay. So that's where I'm at. I'm bearish on possibly here before we go back up. But just be aware that it's possible because it's high probability. So right now, I'm bearish on euro dollar. How about pound dollar? Well, euro dollar, pound dollar, pretty much the same trade. What do you guys think? Does that look like it to play out? Do we have a double top? Did we mitigate an order block? Do we have an order block target here? Yeah. How about an order block target here? Yeah. Wow. Right. And I was saying, listen, we should be shorting. Right. And if you short it, great. Awesome. Good job. So what we're looking at right now, we're looking at a very high probability of more short. And I'm going to mark that up right there. I think we're going to see high probability. Obviously, we're almost there right now. Right, high probability right there, which is around 118, 119 to 117. Right, so I'm gonna put it right in the middle, about 118. That's high probability. Very medium probability. I would say medium to low to see prices come that low. I don't think we'll come that low. But it is, if the dollar continues to be strong and we start to go into more of a recession, yeah, we may see it. But right now, I don't see that as of right now. So I would need to see more development. So I'm bearish, pound dollar to about right here, 118, 117. Let me see, let me put that back. We got a little bit of a mitigation there. I would say we may see a little bit of a pullback and then we'll come back down. High probability, low probability will be here or we come back up. If not, then we probably take off from right here. Right after that and go up. That would be the area of interest that we're going to need to take a look at once we get to this area right here. We need to see what price is doing, what's going on with the market, what's going on fundamentally, what's coming up, non-farm payroll, is it near March, FOMC rate decision, is the dollar continue to be strong? We need to look into this area. Until we get there, I'm not looking at anything else but the short pound dollar. So if this thing pulled back in a smaller time frame, I'm looking for my areas of confluence in a smaller time frame, look for my order blocks and order flows and see this gap being mitigated, and boom, we're coming down because there is a gap that does to be mitigated. Let me zoom in a little bit, show you what I'm talking about. We got this gap right here. This gap right here need to be mitigated. Whether it gets mitigated this week, or maybe we get it mitigated later on. We may see more bearish candlestick, or we may see a bullish candlestick first, which could happen, right? When you need to take a look, we could see a bullish candlestick, and then we roll over, right? Then we roll over. But either way, this is not the area where you want to short right now. No, do not short the lows, right? Do not short the lows. Wait for the pullback. Even if this thing does pull back, even if the thing does go down lower, wait for the pullback. This is a 200 moving averages. We're right there. All right, that's going to act as the area of support. We're going to see a little pullback, maybe about that 50% level right there, that premium swing high, swing low right here. And then we'll come back to the 100 moving average right about here, and then come back down. This is where you want to short. Right in that area. Okay, that's where you want to short it going down. So I'm bearish, pound dollar. Okay, let's look at the odd dollar. What do you guys think? Go long? Should we go long? Oh, no. No. It's going down now. Oh, I know that. But did you know I was calling that 1, 2, 3, 4, 5 last week? I was calling that short. Yeah, I was shorting that. Scalping it short. Came back, hit me every time. Look at this order block. Are we there yet? Yes, we are. Yes, we are. We got another order block sitting about right there. And we got this blowing down there. I don't see that happening. What I see happening is we come down about right in this area. High probability. Right there. And this target is about 0.67. That's about 0.68 even, 0.68. Let's call that 0.68 even to about 0.67. This would be my area of demand that I'm looking to see. And then I will put this down here as a medium probability. Now, I know that's in that order block, but there is a lot of area of support there that I think the market makers are going to want to come down there and mitigate that area. I'm going to put that there. And this is what I'm talking about right here. See that? Put this a little bit lower, about right there. Okay, so I think price could come down here about 0.66 as a crazy low. before we go higher. But I am looking to short our dollar more. Not right now. Not right now. Not right now. We're gonna short the lows. We got an imbalance sitting right there. So we're looking for it to come back, mitigate that right there, and then boom, shoot in that area right there. This would be that area that I'm looking for mitigation. Okay, so I'm talking about the price I'm looking at. 0.68. 0.68. That's what I'm looking at, 0.68. So we could see it come back a little bit lower. And this whole cluster of area right here is what we're going to be seeing a lot of. We're going to see this area revisit. This area right here. Would you agree? Because we got a lot of orders here. So we're going to see something way in this area, right? I'm showing that to exaggerate my point of area of why I think that would be an area of interest, of price coming down. There's a lot of orders that's come down here to manipulate, okay? So I can see that coming down. So I'm looking for a price to pull back a little and then come down in this area, and then we'll probably be in this range. We may dip down and then we're going back up, right? In the next 2 to 3 months, right? As of right now, maybe this week we may see a little small pullback, and then we may come back down, create a double bottom, and then people are probably going to think, oh, it's going to go back up, and then we break down even lower, right? You want to take that short once it comes back up here. Let's go and mitigate this, pull back a little bit, just down move. It may come back. I don't think it's going to take it all, but it might come back a little 50% pullback, 30% pullback, and then boom. Okay, our dollar, I'm weak, bearish. New Zealand dollar, same trade for our dollar. Take it down, take a look. Tell me what you see. Very clear, isn't it? So we have this way up here that seemed to be reached up. This whole area right here, right? And that was an order block. That was an order block about right there in this area, boom. That was an order block. That's an area of supply. You guys see the North order block in this area right here. That whole area, that's a cluster of orders that I see. And there's a small probability we see this right here. Okay, price is right there right now. Okay. You see this candlestick right here? We're at this order right here. So there is a high likelihood I'm expecting price to come down to this area right here. And we visit that same area, which is 0.618. Okay. So I'm going to put a high probability there so that you guys can mark it on your chart or on your notes. If I can spell it right. So we're looking at lower prices come down. We'll possibly see a double bottom. So don't be alarmed when you see that and go, oh my gosh, it was right on, right? And we may see this price. So I'm going to put that as a medium probability of right now until we see some more evidence when price does come down to this area. And then we'll see if this is a medium probability that will most likely become a high probability. Most likely by the end of the week, right? So right now, I'm looking for price to come down around 0.620 or 0.62 even. 0.6200 seems like a very good round psychological number. I would agree with that, 0.6200, okay? And then we most likely could see 0.608, 0.06, let's say 0.067, 0.607. That's a possible low probability in the future, but as of right now, I'm looking for this little mitigation, pull back, and if we don't bounce off of that, we could see this before we come higher. Okay, so we're going to see a nice little trend on the way down, and we could be seeing this. Okay, so don't be surprised if you do see that little pullback. Right? Don't get alarmed to think, oh my God, we're going back up. We're not even there yet. We got to get in this area zone before we even start to consider going up here. Okay, so I'm looking for a little bit more bearishness on NCD dollar this week after the pullback. Okay, USD CAD. What am I looking for? USD CAD. Let's take a look. Okay, so dollar strength, taking advantage of the CAD weakness. I would say I would expect to see maybe dollar CAD go a little bit higher, and we may be in this range a little bit, right? So that means CAD and dollar strength. So not a very good trade to set up, because we had this nice little channel, right? We'll draw this out. I can get this line. There you go. Got this nice little channel there. Very nice. I like it. I think you guys can all see that. We had a lower low, lower highs, lower lows, lower highs. And it looked like we got a little bit higher. We got a lower low. Okay. So I'm looking to see a breakout out of that channel to the upside with the dollar strength. Okay. First thing, boom, about right there. I think we're going to see an equal high, but right there. So there is a scalp opportunity to take up to about 1.35. So in the lower time frame, I'll be looking to scalp this. But if you're in the day or swing trading, don't worry about this. I would take it and wait for it to come up here. Believe it or not, I am thinking after it comes up here, we're going to be in this range a little bit, right? I think the CAD strength is going to kick in, and then we'll start to see this. We will not get here until, what I mean by here, we will not get down to this low of 1.03 on USD CAD until we get the dollar weakness, right? I'm gonna go to the monthly and show you what I'm talking about. This is what I'm seeing. This is on a monthly. This is the high of the chart. This is the low of the chart, okay? And what that means is anytime we're up here, this is a supply. This is a supply area, and anything down here is the demand area. If you don't know anything about supply and demand, make sure you sign up to our academy so that you understand exactly what not to do and what to do, right? In the supply area, we are looking to only short, right? We're looking to be bearish. We want to sell when we're up here. This is what we're looking for. Anytime we get in this area, we want to buy. We're in this one freaking long ass range. If you don't recognize that, that's an issue. This is on higher time frame. Let's go down to the weekly. Right? We had this nice bullish trend. We got to this order block. We're coming down. We're going to lower low, lower high. We are going to see a lower low of 1.03, right? But we got a dollar strength we got to worry about, right? And that is what I'm talking about on a daily time frame. Yes, we are in a lower low, lower high. We're going to see lower low in terms of the higher time frame. If you don't see it, let me mark this up. Lower lows, lower highs, lower low. That is going to happen. We are going to see this. Yes, we will. We're talking about from where price is at right now, we're looking at about 400 pips. But that doesn't mean it's going to happen right now, because we got a dollar strength to worry about. So in the meantime, we're going to see a small right here, and then we come down. And we're looking at about a nice 500 pip. So as of right now, that dollar, you see this candlestick? We have reached this low. Why that low? What's so significant about this low? Well, how about that for you? That's an area of zone right there that was mitigated, okay? We got this little area right here that was basically mitigated. Now we're on it back up. So that down FOMC decision, and boom, the dollar strength came up. So what I'm looking for is a pop out of this range, because when you see this pop out of this range, who's seeing that? Everyone is. So what are you thinking? If you were a retail trader, trading breakout, well, it's going to go up to the upside. So you're going to go and buy it, right? You're going to go ahead and buy it. And I would too, but I know how far to go. Or you don't trade it, right? Maybe it's not worth the move. I'll see. But right now I'm looking for it to go high maybe about 1.35. I wouldn't be surprised if it does come up here, okay? So that's two areas it can come down, it can come up to. It can come up to 1.35. It can go as far as 1.36. I don't believe it would come into this area because then it would be a different type of pattern to the higher time frame. This would be higher highs, higher lows, and then we got equal highs, something like that, right? So I think it's just going to stay in this range here, but look for the breakout of this channel for USD CAD. Not a great trade setup. I am saying that shortly I am bullish. I am looking to see USD CAD come up, and then I'm looking to see CAD strength kick it in, and I'm looking to see the equal Canada and USD strength. So what happens when you have both the quote and the bearish currency strong? We'll expect to see ranges, right? So that's what I'm kind of expecting to see. I'm expecting to see a little bit of strength, both currency. But I wouldn't be surprised to see dollar CAD just take a little bit up. But either way, not really a good setup as of right now. It could range in this area because I'm expecting the CAD strength. So USD CAD, that's not a great trade unless you want to scalp it. So I'm short term, I'm bullish. Long term, I'm looking to be bearish. That's dollar CAD. Okay. Dollar Swiss franc, however, is in a better position. Would you agree? Take a look at that factor for a moment and take a nice breather of the highs and lows. That's very clear, right? Versus the USD CAD, where you don't see a lot of nice highs. This is a nice low. That's a nice high. That was a nice low, but not right here. But when you look at the USD Swiss franc, and as I pointed it out on a day, this looks pretty good, right? So here's what I'm talking about. Let me mark up the charts real quick. We got about $1. We got a nice area of order block there. Did we get mitigated? Oh yeah, it looks really, really good. And then we got a nice order block sitting right there. Well, the most important thing that we should be aware of is that there is a big imbalance staring us right in the face right there. So I would like to see that dollar strength kick Swiss franc butt all day long and push this thing up. I am nothing but bullish on this thing. Like it's no tomorrow. I would be buying. I would have bought down here. I didn't get an opportunity. As I was stating last week, so we should buy. It went up. It bounced right back. You should have reload and bought that back up here. And if you did that, that's great. If you would have bought down here, you had about 140 pip. You saw that thing drop. You took another 140 pip, and therefore you 280 pips in the green. Isn't that awesome? Just because you saw this mitigation low of the order block on Swiss franc. Now at the dollar strength, well, I'm expecting to blow past this thing right here. Okay, so right now I am bullish. Like I ain't no tomorrow. Just already stated that. I'm looking for maybe a small little pullback from this area, back up here, and I like to see that pocket mitigated. Okay, so I like to see US dollar take away that high and come up here to that mitigation in this area, in this zone, because right now I'm not looking to do anything else but to go long. Well, here's the other evidence. Here's our premium and discount zone. Do we sell when we're in a discount? No, not on a higher time frame. This is nothing but looking for it to go long, right? And the other thing is we have a nice area of where the price is coming down. It came up, came down, came up. Let me draw that letter out for you. That is a W. That is a great sign of a candlestick pattern that we're going the other way. Now, you can look for even more signs when you see that change of character mitigated right about there. If you want to wait more of a conservative entry, right now is a great entry. But if you want to wait for a more conservative entry, wait for the break of that, then take it long, right? That choke situation right about, I want to say about 0.92. We might see a small pullback, maybe about right here, about 0.91. If you do get a small pullback, look for that. I wouldn't go long here. Wait for the C price get a little bit weak, on Monday, and then because Monday it's gonna make it look like It's going short, right? Monday's a trap day. It looked like it's going to go short. Tuesday, boom. USD Swiss francs could do that. Short. Monday. Look like, oh man, let it come on. It looked like it's going to get a triple bottom, and then boom, Tuesday, take it back up, pull back Wednesday, right? This Wednesday could have been a reversal day. So USD Swiss francs, I'm long. USJPY, what's going on, JPY? What are we doing? All right, thank you for asking. Let's see what we're looking at. Take this in, guys. Tell me what you guys see. You're starting to see the pattern. I point that out, you guys should be able to see it. All right, so we got an order block. Yep, right there. Yep, we did mitigate it. Yep, I think you nailed it, Brad. Good, quick eyes, great. Right there. What kind of candlestick pattern do we have? W, sounds good. We had a nice little trend line there, right? What I'm talking about, right here. You guys see that? Yeah. That was nice. All right, that was a nice downtrend right there. I think that was almost like textbook. Lower lows. That was lower high, lower lows. Yeah, lower high, lower lows. Lower highs, lower lows. And then we got a lower high. Did we create a lower low? Nope. We created a low. This is the lower. This was the previous low. So for us to have a lower low, we would have to come down here. Right? That would have created a lower low. But as of right now, it looked like we have a break to a higher high. So now that we got a higher high or equal high, that's telling us that we are most likely going to start to see higher prices. Okay, we got a couple order blocks to be able to reach out. We got one here, we got one here. Yeah, change of character right there. That's all we're waiting for. Change of character, take it. Right there. Change of character. Oops. Let me go ahead and zoom in a little bit so you guys can see it. Price of 131.12. It looked like it broke that, right? So here's what I'm seeing. I'm looking for it to pull back. And then we'll come back down, okay? So right now it's high, we got a little pocket, let it drift back, let it drift back Monday, then boom, trap day, going back up, okay? I'm looking for a very high probability price to come here. And what is here? Here is price around 132.5. Let's make that 132.5. Let's hover around my mouse right here. 132.5 will be the first TP1. And then we got about a medium probability that we could see price if dollar continue to be strong. And this is a great sign to get into great signs of what's going to be going on with the yen. Medium probability. Okay, so I don't think we're going to go way up here. This is the medium probability. I need to see price come up here. So we're looking at about, price going to come back down, but let's say it comes up about another 190 pips. However, I think it's going to pull back about right here. So we're looking at about 269, 270 pip potential for an overall potential 686. So as my traders knows, listen, we take the short, we wait for the pullback, and then we take the aggressive entry right here. The W pattern is forming, take the short, boom, we're going to look at the predicted low, predicted highs. We'll see this on Monday night, maybe Tuesday, boom, take this up. If not, I would say put a pin in order, pin and buy order about right here, about 129, about 50% of that candle, institutional candle on the daily, come down about right here, or look for this little fade, come down, look for a pattern, and boom, take this back up. Okay, and then we'll see what happens when price get up around this area, see if we're going to see more dollar strength, which I think we are. I think we're going to see this before we come back down, but we are going to come back down. We are. Look at that. We're all going to come to this area. Just not right now. Right? We will see prices around 122. Yes, we will see prices come down about 116. And there's a very high likelihood we're going to see a complete turnaround from 2022. Like that ebb and flow, it's just one big oscillator. We teach that in our coaching students, right? So we know that what goes up must come down, and we just need to be able to catch this. So look for this little breakout, get everybody thinking we're going long for a little bit, and then take everybody out. Okay, so that's USD JPY. I'm bullish. Let's look at Euro JPY. Okay, Euro JPY has been really, really nasty and very, very difficult to trade. I would agree, right? Because it's kind of all over the place, and Euro's kind of been acting kind of funny, and we're going to have to be very careful. So right now, I would say Euro JPY and Pound JPY, to be honest with you, both of them are very ugly traders, trading setups. Very, very hard, right? Unless you can trade ranges and you're not afraid to trade ranges, right? So overall, it's bearish, right? Meaning we're going to see prices come down here. Okay, we're going to see prices come down here about 132 and 125. This is where I'm looking at. But right now, we're having a lot of opportunity where prices like come in here, flag breakout, come in here, flag breakout, come in here, flag, and we're going to see a little breakout. Yep. Unfortunately, that's what we're going to see. Let me show you what that looked like. So I am expecting, look at, you see this candle? That was a bullish candle. That was nice, bullish candle. We've seen a little equal high. I think we're going to see a little bit of more bullishness. Why? Well, for euro dollar to go down, that means euro need to be straight, need to be weak, the euro. Euro dollar, weak. Euro JPY, if euro is weak, that means, I'm sorry. So euro, this, take that back. We may see the euro strength, dollar strength. I think the euro is going to be weak, but Japanese yen is going to be weak as well. That's why dollar is going to take up Japanese yen. I think we're going to be in this range. When we got two currencies that's in a week, you got to know how that works. We might be in this range for a little bit, to be honest with you. I'll take that back. So we're looking at possibly, yeah, it's not a really good setup, to be honest with you guys. I would skip Euro JPY. I do not think it's going to go higher. If it does, we need to see the break of 142, 143 even. If you see a break of 143 even and it stays above 143 even, then we're only looking for a small move, 200 pips. It's good, but you're looking at about a 200 pip move to this next range. And that's about as far as it's going to go. It's not gonna, we're not going to see this high. So I think most likely we're just going to stay in that little range. And to be honest with you, it's not really an edge until we get signs that Japanese yen is going to be taken over as a very, very strong strength. And I think we need to look at USD JPY and wait for that strength before it comes back down. In the meantime, it's slightly bullish. Other than that, we're looking to be ranging. I would say put this on your watch list. It's not even worth trading. So I would skip that. Let's go to Pound JPY. It's going to be the same difference. You see that? Look at that. That's nasty. This one, however, is slightly a little bit better than Euro JPY for the simple fact that we have made a little bit of a low, right? And there is an order block sitting right here, and we're in this order block range here. So there is a slight chance of opportunity right here. If you wanted to trade Pound JPY, that's a nice trade, scalp trade right there, 378, okay? So I would say I would take this trade over EJ, and I would take this trade back up to about 161, okay? And then we're gonna probably see this a little bit. Yeah, and we're gonna probably see, one more move before we come back down. This is what I want to see. I want to see it come back down, but I don't think we're going to go any higher. Um, I could be wrong because there is a slight imbalance here, right there, and I'm gonna mark that up because I got to be aware of that. So, could JPY could go higher? Pound JPY could this go higher? It could, but I would definitely go long. Oh yeah, right now. Right now is a good opportunity to go long for pound JPY. If you're looking for a trade, that's a nice trade entry right now. This is a nice trade entry, pound JPY. We're looking at about a nice, yeah, nice 300, 200, 382 pips. That's pretty nice. Let's see. Yeah, about 300 pips. Oh, that's nice. I take that. And then possibly hold it and trail it. But if it starts to go the other way, I would say get out of it. When it comes down here, look for another opportunity where you can start to see it pause and liquidate this area and then reload and come back up. Until we get the dollar strength, dollar JPY, and when you start to see JPY strength kick in, then you may see the low. But right now, I think pound JPY is going to go up. I'm bullish on pound JPY. CAD JPY. Same thing, CAD JPY strength coming on in. I think we're going to take this up. I think we're going to take this up to about this area right here. And then we'll probably see this. But we are going to come down, right? So I think CAD JPY is going to take a little bit higher. I like to see that come up. There is a slight likelihood for it to come up here. I doubt it, but got to be aware of it. So the 50% move up here is what I'm seeing, and this is what I'm talking about. Pick the swing high, swing low. Okay. So in this area, in the discount area, is what I'm saying that we would not be looking to sell. We're looking to buy. This is where we're looking to sell. And especially when you see a bottom and tail like this, all that liquidity, that is a multiple level of M's and W's, W's, all crazy, triple bottom, stuff like that. That is some crazy lows right there. And we've got to break that. So it looks like we're going to go ahead and go higher. Look like we're going to have a change of character break up here at 97.6. Let's see that change of character. 97.8, sorry, 97.8 break of character right here. And then we're going to go higher. And we're looking about going up to about 102. So we're looking at a possibly 420 pip move up. Right. Obviously, we need to break this area of resistance, which is 98. I'm expecting it to go higher than this. So CAD strength, and hopefully they take it, a little bit higher to about 102. Okay. So right now, CAD JPY, I'm bullish. RJPY, I think RJPY is going to be in a range a little bit because I think odd and both JPY will definitely see on the bank rate. I think that bank rate is going to make it weak. So I'm neutral on RJPY. I don't think this is going to go anywhere. I think it's going to be in one of those ranges to where we may see a little bit of RJPY, and then we may see this. Okay, I think RJPY and EURJPY, to be honest with you, I think it's more one of those ranges. I would skip RJPY. It's right there in the middle. It was a good trade when it was up here. That was a nice short, and when it was down here. But when it's sitting right there in the middle, which way is it going to go? I don't know. It depends. I need to see it take this high, or I need to see it come out and take that imbalance. As of right now, I can't tell you. It's kind of hard to determine what's going to happen unless I know if the odd, if JPY is USD, if dollar JPY is going to go long, that means Japanese yen is going to be weak. That means odd can take it back up, but I'm expecting odd to be weak as well with odd dollar. So I don't think it's going to go further. And RJPY could be battling for the weakness area around, the lows, just like your JPY. So I'm not so sold on RJPY. I would stay out of it for a little bit. If not, look for short when it comes back up, because long term, oh yeah, I am definitely looking for this bad boy to come down. Right there. That's my area of confluence right there. That's my story. Sticking to it. I want to see RJPY come all the way down to 83.5. Will we see it? Absolutely, we will see it, but not right now. We're going to be ranging here a little bit. JPY is going to be a little bit weak. RJPY is going to be weak. I think both these currencies until odd, get extremely weak. Could we see it this week? I doubt it. But we will see odd be weak. I don't know if it'll do this week. That's the only thing. I would need to see it come out and take this low. So right now, I'm gonna stay out of it for now. NCDJPY, look at this. Same difference. Bouncing off this high, bouncing off this lows. You're seeing price doing this. What does that mean? I don't know what the hell is going on, right? That's what it means. Right now, we're looking like we could be going back up. We could be going back down. Until then, I wouldn't take any trade because we don't know which way this is going to go. Right? This thing is up here, coming down, it's ranging. As of right now, with the dollar, with dollar Japanese yen expected to go long, I would expect a little bit of weakness in JPY. Come back down. It mitigated that order block. Possibly look for, if I were to call it, right, I would say I'd be bullish on NCDJPY more than I am with JPY, which is not bad. This is a nice little 140 pip target. And then I'll be looking to take it back down. However, there is one little thing, tidbit of issue right there. That means there is a possibility we could finally break out of this range and come up here like that. Ooh, that would be extreme, and it is a possibility. Okay, so right now I would be looking to go bullish. If it doesn't go any lower, I would look for signs to see a pattern. Obviously, I want to see a higher high, higher low, take that trade, then go up. Okay, as of right now, I wouldn't take that trade as of yet because it's still forming that low. I need to see that mitigated with a high pullback and then another low where, like a W pattern, and then boom, I take that up. And then take it about right here, hold it as it could come up here to mitigate that imbalance, take out that, and then come back down. So right now I am slightly bullish on NCDJPY. CFTC, ooh, this is going to be nice. All right, so CFTC, I am looking for CFTC to come back up. If you can see this right here, we had a nice little downtrend channel. That was nice. We had a lower low, lower high, lower low, lower high, lower low. So what are we looking for now? We're looking for that upper channel to be broken to about maybe to this area here, which I see an order block sitting about right there. Okay, so I'm looking for CFTC to come back up here about 146 before we come back down. And this is the area of confluence where I'm seeing right now. For that low. Oh, even lower than that. Oh yeah, this is a feature. I'm telling you. Remember, we talked about it on the monthly. Look at this. This is a history of CFTC. We were this high and we went way over here. Way over here. Let me see if I can see the IDC. All right. This was back in 1979. You guys remember the 70s? Yeah. 1979. what happened here? And we came here, it came here, it came all the way up here, just that candle, look at Chef JPY, Chef JPY came all the way up here in 2015, boom, shot up, came back down, right? This is like a black swan event right there, 2015. And then we came back up here now, 2022. We haven't been here since 2015, and then the last time we've been here since 1979. We're not coming back up here again for a long time, right? We're looking for price to come all the way down here. We're looking at a 2,727 pip difference. I would even put a trade and don't even look at it for the next 6 months and wait for it to come down, because it's coming, right? But that's not realistic to hold it that long. That's what I mean. But it is realistic to play it. But we were already shorting it. But I think it's going to pull back a little bit. So you may want to get out of the short and get ready to reload, because it's coming. It's going to give you another opportunity to short. Okay. Now, if price fails to get out of this area, and that area is 143, if it fails to get out of this area, then we may just stay around in this area for a little bit and kind of just be about that high, and then we'll come back down. But either way, we are going to come back up a little bit. So let me go ahead and put like a little marker here. So high probability we're coming back this high, about 143. We could possibly come up here to about 146. No, that's not what I wanted to write. We have a slight imbalance sitting right here, right there. I think this is going to be mitigated. Okay. Hope you guys are putting your plan together. CFTC, I'm looking to go a little bit bullish. How bullish? It will be seen potentially just a little bit more, maybe about another 154 pips. That would not be a bad trade to potentially 467 pips. If not, you can sit out and wait for a short here. If it goes higher, short that damn thing again, because we are going way lower. When we come back around, when we roll over the next time around, 854 pips from this marker. Okay, how about 1,100 pips from that marker? Okay. Now, if you want a swing trade, that is where the money is going to be right there. Or you can just scalp this all the way down. Okay, that's Chef JPY. I'm a little bit slightly bullish. It's not ready to come back down yet again. Euro odd, as you guys already know, we're going to have a big news on Euro odd. If you look at Euro odd now, Euro odd has been kind of ranging around here. That's a nasty range. As you can see, Euro odd was coming down. It was playing around that strength. Came about this high, around this area, and then it came all the way down, right? That odd strength came in, and then Euro kicked it back up. However, I think we're going to kick it back down. Okay, I think odd's going to come a little bit stronger than Euro, and I think we're going to come back to this area. I think we're going to come back slightly down this area. So the one thing I do notice is it came down, it came out these areas right here. That's a nice push up. I'm not gonna lie, that's a nice push up on the Euro. However, I do think I think Euro odd is gonna push it back down. Right. I think we're gonna push it back down. But odd is gonna be weak as well. So this is gonna be tough to call. Take a look. It's looking like we're also creating head and shoulder as well. We haven't come back down here and mitigate this area. So it's kind of hard to tell as of right now. I would say there is a slight chance that we may see a little bit more bullishness, but if not, to be honest with you, I'm looking to at least revisit that one more time. I like to see it come down here, euro odd. So I think I'm looking for it to come down. If it doesn't take out this high right here, if it doesn't take out that high of 1.57, and we start to come back down again and start to stall, and we would need to take a look at this. If you're trading euro odd and you're bullish, you want to start tightening up your break even or trailing. If you're looking to get into euro odd, wait till it come up here. Wait for euro odd to make its highs, right? See if it's going to come in, see if it's going to create and take out that high. If it takes out this high, then we're going to come in a little bit higher. I don't think that's going to happen though. I think we're going to come in, we're going to see around this area, or we may see it around this area, stall, and then roll back down. And I'm waiting for it to come back here so I can buy it. Okay. I just don't see the opportunity for me to want to, it's been in this premium zone this whole time. I want to come back down here in my discount area, right here at the 618 level of the fib, below the 50. This is where I want to buy. So this is in that nasty little range, up and down, scalping it. And I think it's going to come back down. Once it comes down to here, this is where I want to buy. So as of right now, I am a little bullish on euro odd for now, just a little bit, but I think it's going to roll over and be bearish. Let's see if pound odd gives us a little better setup. Okay, yep, I see a little bit better setup on this one. Just look like it's going to give us a little bit more bearishness. It's showing a little bit of signs of strength in the pound. Look like the weakness of odd. I think this is definitely going to come back up, and then we'll roll back down. So this is the area I'm looking for right now, where I just see odd come back down. Okay, so right now I'm looking for a little bit of bullishness and pound odd, create a higher low, lower high, and then come right down. Okay, I think we're right there. That's what I'm seeing. So a little bit of bullishness on pound odd. If I was to trade this one, which I won't be trading this one, but if I was to trade between the euro odd and pound odd, I would be looking to trade pound odd a little bit higher to see if it comes up a little bit and take out that high into this area, and then I'll be looking to short it. Okay, there is a little bit of opportunity that this thing could go about as much as 224 pips to the bullish, to the upside, and then we'll roll back down so that we can create that higher high. Right, we got the higher highs, higher lows, higher highs. This is definitely a higher low. I'm looking for a higher high, and then I'm looking for a higher low, and then we go up. Okay, so that's pound odd. A little bit of bullishness before we drop down. I would not sell it. I would be looking to go long. So how about euro CAD? How's that looking? Ooh, you gotta think about this one. What is going on here? Right? Tell you what, pound CAD. This is a nice setup to go short. Okay. So this is what I'm looking. And I would put this as a high probability. We're going to come back and visit that. medium. Medium probability. Oh, not that. Medium probability will come in. So I'm looking for your dollar to come back here and retouch this low here. 140, 1.42, 1.42, 1.424, high probability. And then if we get a break of that, we're coming down. So we're looking at a 219 pip drop to a potential 720 pip drop. Okay. And then once we get there, we'll go high. Euro odd and pound odd, out of the euro odd and pound odd definitely, but out of the euro odd and pound odd trades, I think the CADs are better. I'm looking for CAD strength to come in. I like to see CAD strength, take it back down here, down to around this a little bit, break that and come down. So if I was to looking to trade, I don't think this is going to go higher, especially this right here. Look at this move. We got a nice move up right here. Come down. It's a nice little cup. I think we're going to create a handle, and then we're going to shoot back up. Yep, like a nice cup and handle pattern. Okay, on a higher time frame. Let me see what it looked like on a weekly. You see what I'm saying? Nice cup, create a handle, and then we'll come back up here. How about pound odd? The pound odds have that same looking pattern on the weekly. What do you guys think? Yeah, I think so. So let's go to the daily. Look at pound odd. Oh yeah, it's already taken that dive. It's already taken that dive. It's coming down here right now. So right now it's a high probability. We're coming down here. It's already start to move. So that means if what I like about the difference between euro odd and pound odd and the euro CAD and pound CAD is that they both move in tandem, but not always at the same pace. So the best way to do that is to take the best thing you can do is take advantage of these pairs by saying, listen, pound odd has already made it move down. Euro CAD, I'm sorry, pound CAD has already made it move down. Euro CAD hasn't moved yet. That means it's going to follow suit. So basically, the euro CAD and pound CAD, you can actually use it to say, if I miss one and it looked like it's starting to go down, you can best believe most likely the other pair is going to follow suit, and it's going to be more of a lagging. So if you didn't catch pound CAD, there's an opportunity to catch euro CAD. Okay. So I think your pound CAD is going to have more strength, more opportunity to come down. I think that CAD is going to be just a little bit stronger than the euro and pound. I think euro and pound is going to continue to be weak this week, because I think the pound dollar and euro dollar is going to tank. It's going to go even lower. So we're looking to see lower prices. We may see pound CAD get to this point right here, and it may stall. Okay, it could come down here, but I need to wait and to see what it does when it comes down here. Okay. And for me to take a look and wanting to consider buying it, it needs to come to this low, right? It needs to come down below right here to my 50% level and get down to in my discount. If it could, it would be nice. I'll take that bad boy up. But as of right now, I'm definitely bearish. I like to see pound CAD get that low. Could it go lower? It could. And if it does, this is where I'm going to want to buy it. If it breaks it, then I'll take it down here and I'll buy it right there. So I'm looking for pound CAD to come down around about 1.58 even, 1.59 even. Let's go to that 1.59 even. And then it could possibly come down to 1.53, but at least right now 1.59 even. 1.59000. Can't move my mouse right there. Yep, it's okay. So 1.5900. I'm looking for pound CAD to come down. Okay. Your NCD and pound NCD, let's take a look. Ooh, it's nasty little trade. This is ugly. Okay, I'm looking for your NCD to come down. I'll be bearish. I would say if it doesn't take out this high of 1.7, then we're looking for it to come down in this area again, 1.65. This should be a nice little trade short. I think NCD is going to take up strength along with the odd over euro and pound, looking at a 596 pip potential minimum into this range right here of 379 pip range. So there is a small cluster of orders that is sitting right here. Until it breaks that, then we'll be coming down. But I think it's definitely going to come down. It's going to, if it fails to break 1.7, we're going to come down here to about 1.67 for 352 pip, potential 1.65. So I'll be bearish. I don't think this is going to take out that high. I think your dollar's going to go down, pound dollar's going to go down, your odd, your CAD. I think that odd is going to be slightly stronger to take this down along with pound odd, pound NCD. So that was your NCD. Look at pound NCD is already getting beat up. Okay. Your NCD is a better trade between the two. I don't. I see pound NCD coming a little bit lower, but right now it's already been taking a dive. Right. It's already been taking a dive. It's not a really good trade setup right now. Because if you wanted to short it, you would be shorting the lows. You don't want to do that. Could it come lower? Yeah, but as of right now, I would skip. I'm not even putting the bias on pound NCD as I would with your NCD. Your NCD shot up. I'm looking for this thing to roll over. Yeah, I would look for this thing to roll over and short it. Pound NCD, I'm skipping it. I'm not even going to give you the bias. I wouldn't even trade it. If you wanted to trade it, I wouldn't even know what to tell you. I know it could go lower, but it can just push it from here and then liquidate you up, or it can pull up a little bit and come down. So look at this right now. Price is up here. Price came up. It could go a little bit higher. I think it's going to come back down. Okay. So if you were to give me a bias, I would say I'll be looking to short it. Right here. I'll be looking to not see it break above this hot control point up here, 1.91. And then I'll be looking to short it down here. Okay, that's pound NCD. Cash Swiss French, and then I'm gonna leave it go with one more with your pound. Cash Swiss French. Oh, continue to do nothing but buy. I am nothing short of anything else but to be buy on Cash Swiss French. For Cash Swiss French to go up, what currency need to be strong and what currency need to be weak? And I've been talking about it for the last 2 hours. CAD, I'm looking for CAD to pick up strength, and therefore I'm looking for this to pick up. Yep, thank you, Brian. This is what I'm looking for. Okay, we're looking for that order block to be mitigated. We have a very strong imbalance right here. I can see prices coming way up here again before we see anything lower. Okay. I'm looking for price to come up here, possibly up here as well. Right there where that order, there's an order block sitting right there. Okay. Look at that. Okay. Cash Swiss French. If you didn't get an opportunity to buy it, You'd be buying the highs. It could pull back a little bit, but I think it is going to finally break this, right? We've been on this little trend here, and then we had a little flag, and then it came back down right there, came back up. Probably take that out. I think this is a good opportunity right there, but we kind of missed it. So I would say wait for a little bit of pullback and then take that up. But if you wanted to, you could. It might have been a little bit drawdown. If you did, you can cost average that back in there again. But I think long term, you're gonna be profitable anyway. I think this high is going to be taken, and we're going to see this right here. So we're looking at a potential 206 pip move up to potential 413 pips. So if you're already in the buy from this low, hold it. If you sold it, hope you bought it back here. If you want to get into it, I would say wait for a little pullback. If you do buy it, it'd be kind of aggressive. You might see a little bit of a pullback for a little bit of a drawdown, and then you would want to cost average that in. Okay, that's CAD switch French. One more, euro pound, because all the rest of the pairs are just ranging. Go to monthly, take a look at the monthly, see what this looks like. Okay, this is the monthly. What do you guys think? Price is right here right now. Should we buy or should we sell? Look for short. Something tells me we're in the supply zone area. We do not want to buy. Do not. It's an uptrend. We missed that, right? Or if you were in here and you was buying it, great. This is not a great time to get into a buy now, right? So let's take a look at a daily time frame and see what it's looking like. Okay, so this is what I'm looking at. I'm looking at a potential short in the back, and I like to see it. I'm more bearish bias right now, but right now we're kind of locked into this this uptrend right now. So this is looking very, very bullish. So what we're looking for is we're looking for an M pattern. Okay. Right now it's not the time to short until we create a low and equal high. We create an equal high or we create a lower high. I'm looking for a low, and then I'm looking for either equal high or a lower high. Right here, once we see that evidence, this is where we want to square it. That looks like oh, that's a reversal pattern. There you go. There you go. That's what we're looking for. Okay. We're looking for that. I'm bearish, and I would say I'm looking for that pattern to play out. How long? That would be undetermined. High probability, I'm looking to short that one, and I will be looking in a lower time frame. We'll be looking on our predictive software or artificial intelligence to say when is it looking like to go, because that's when we would get a very good foreseeable opportunity from artificial intelligence to give us a predictive highs and lows of the market for the intermarket correlations of euro pound. What I can tell you based on these little, look at that. We got an imbalance there, and we got another imbalance right here. We got quite a few imbalance. We got one right here, one right here. So let's zoom in real quick. You see where this thing is going to come in? It's going to come in. It's going to mitigate that right quick. It's going to come in, and it's either going to give us an equal high or a lower high. And then we're going to see that. So if you wanted to be aggressive, when that thing starts to turn around, you could take a sell and wait for it to bounce, and then take another sell there, or exit and then take a trade here. If you wanted to be conservative, then this would be the only place you would want to look for. You want to look for that opportunity right there where it starts to come down and a bounce. That's what the trade you want to get in, and then you take that down. That's a nice trade opportunity. Right now, we know this pair doesn't range as much. It only range about 40. Let me see, not that much. Let me take a look at my chart. About 69 pips, about 69 pips, 66 pips a day. Okay. If I was to measure this right now, that trade right here, yeah, about 56. Look at this, is about 65 pips. I can see it come out 68, 69 pips, mitigate that area, and that will give us a lower low. That's what we want to see. We want to see a low, and then we want to see some type of lower high without taking out this high. Okay, that's a nice little liquidity grab right there. It's giving us a pin bar, and we want to see this price come back down right there. Start to come down. Everything's starting to be a little bit peak, and I want to see that come down. That means euro would have to be weak and pound would have to be a little bit stronger than euro to come back down. I want to see it come down in this area, come up. This is where you want to take that trade. Okay, so I'm bearish on euro pound. I'll be looking to trade that short for sure, and we're looking for a nice potential 162 pips. Overall, we're looking for a nice potential 362 pip move. And then, believe it or not, I like to see it come all the way down here. Okay. Because right now it's been in that nice little uptrend right here. That was nice. And I'm expecting that to come all the way down to this other end of that channel at least. Okay. That's why my target's there as well. Got the up the end of the channel. I like to see this channel. If it breaks out, then we'll come in here. Okay. But in the meantime, we'll at least come in here with a very medium probability. Okay. So first order of actions right here, medium probability. I'm short euro pound. And then if we see anything, medium probability. Okay. Other than that, pound Swiss francs, let me look at this real quick to see if I see an edge. Nope, that's ranging, pound Swiss francs. That's ugly, wouldn't trade that. These are all low range, ranging pairs. Oh. Swiss francs come in here. I think we're gonna come back up. We're gonna see a little bit more range, but this is a nice trade. This was a trade to catch if you would have stayed. If you would have stayed in it, that would have been a trade to short it on odd Swiss francs when it was short. I think we are going to see a little bit of, we might see a little bit. I'm sorry, odd cat. Yep, thank you. So odd cat. No, we're going to see more. We're going to see more bearishness. I think we're definitely going to see more bearishness. Not Swiss franc, more bearishness. We're way oversold. This is going to be a little bit of pullback. So I am bearish. So a little bit of pullback, come back down, but right there. Why is this thing doing that? Do that again. Okay. Yep, this is nice. We're still in that premium zone. Short it. Wait for a little bit of pullback. If this thing came all the way back down, look for a little bit of pullback to about that 50 point right there. Mitigate that area. It may come down a little bit lower and then mitigate it. Don't be surprised if it does, but it's going to pull back and catch that pullback. Wait for that pullback and short that bad boy. Because hard CAD is coming down. I'm expecting CAD strength to do that. NCD CAD. Ooh. Oh my gosh. I hope someone caught this. Anyone catch this? We talked about it last week. Oh my gosh. I know I talked about this. Please tell me someone got this. Oh my. Look at this. Did exactly what I like to see. Come down, pull back up, gave us a low. It created a lower high. Hello. Come on down. Right? This would have been a perfect trade, been a great trade up here, would have been a great trade there. I'm looking for this thing now to give us a little bit of a low, maybe a pullback, and then possibly about right there. NCD CAD, let's go. Right there. About right there, about 0.82. Okay, we're looking at around 0.82 as a target, all the way down to about 0.8. It's going to be a little bit of a pullback. If right now it's at a low, it need to pull back a little bit, and then it may create this low here. It may complete this low just to kind of, break it out a little bit, create a little bit of pullback. Cash strength come in more, boom, it's going to fall. This is right here. These are nice two trades, odd CAD and pound CAD. Nice trades. Nice trades. Go ahead and put this up here. I'm looking at a very high probability right there. So this is odd CAD, come down about 0.91, and then possibly it could come about right there. I can spell it right. I'm giving you guys some good setups. Hope you guys taking your notes. There's some really good setups here. Give you guys a lot of trades. You guys just got to pick which one you want. Pick one. That's a nice aerial confluence right there. Look at 618 on the fib. All this all this support area right here, and then we can come higher. Okay. So this is looking really good. Watch the pullback. You got an odd CAD? Oh man, that's great. I'm glad you got it. Thank you. Someone got it. Jeez, man. This NC CAD. This is odd CAD. So you got this one. Either hold it or get ready to trail it and then get ready to get back in because it's got more room. NCD CAD. Oh, that was a nice one too. And you can see where the M is nice. This is what I'm talking about. This is that setup. This had a nice little M right here, but then it just quicked down. But I think it's going to come back a little bit, just a little bit. NCD CAD created that nice one. You see odd chef, what that look like. This one doesn't look good. This one may come down a little bit more. I don't like this one. I think of the pairs, I think odd CAD and NCD CAD by far, it's great. Just look like it may come down. I think it's going to break out of this about right there. But I wouldn't trade odd Swiss French. How about NCD Swiss French? That this is nasty. These are not really good trade setups. This may come down a little bit more, maybe about right there. I don't see that coming any lower than this right here. So that's not a really good setup. You can see, if you look at this, this is NCD Swiss franc. In this area, it's not a trade setup. Okay, that's not what we look for when we're trading. This is a setup. That's a setup. That's what we're looking for. That's what we need to be patient for. We're looking for that setup so we can trade that, so we can get this, and then you're out of it, right? I think this is going to come back down. When it does, and if it does come that low, that's what we want. And then we'll trade it going back the other way, okay? Until then, I wouldn't trade anything like that right now, okay? That's what I'm talking about when you look at odd CAD, okay? When you look at odd CAD, obviously, this is not a setup right here. That's nothing. That's nothing. This is what we're looking for up here. And then it came all the way down here. Like that. That was a setup. That was the setup to trade that going back the other way. So if you were to look at it, that's what you're looking for. That's what you're looking for. And then you see you're waiting for the W, pull back, right there, boom, take it. And then it goes longer, right? Where's my place? Come on. Come all the way up. The price is not even showing up. Now it comes all the way back up, give us an equal high. Now we got another setup. Right there. That's a setup. This is not setup. These are not setups. These are setups. And now we're going to take that down. Now, how far we're going to take it down is at least to 50%, right? Up to a 50%, 618 into our premium, into a discount area, then we'd be looking to buy. Will it come all the way down here? It would be foreseen, and we would have to look at it and analyze it. However, I don't think so. Looking on a higher time frame based on the weekly, I don't think we'll take it that low, but I think we'll come back down here. We'll see if it comes down as low and lower, but I doubt it. I think it's going to come back down here to take it higher. Okay. So I hope that makes sense. I hope that's very, very helpful to know which trade to get in, which trade to get out of it. And let's take a couple more pairs, okay? A couple more pairs, and we're going to get out of here. Odd NCD. This is on a weekly. Let's take a look on a daily. These two pairs are not really great setups, but only every now and then. Like for instance, this was a great setup. That was a great setup. Right now, it's not there. It's ranging. It's in this range here. So let's wait for the setup on odd NCD. I'll let you guys know. I'm looking for odd NCD to come down here. Once it comes down here, I think that'll be the trade we want to trade. Okay. Because right now it's looking like it's kind of doing this. Okay. Guys, this is our trading business, right? It's important that we make sure we understand exactly what we're looking for so we can form a bias, because this is our trading business. This is going to give us that opportunity using proper risk management, risk reward, looking for some great trade setups. If you're trading prop firms, if you're trading your own individual accounts, there's some really good setups, and there's a really good way to look at trades to making sure we're understanding the bias and the potential of what the market makers are doing. Okay, this is Swiss franc. Swiss franc is looking like nothing right now, to be totally honest with you. If you're trading Swiss franc, this was a trade setup up here when we saw the double top. That was perfect. Came all the way down. If you take a look, that was a great setup down there. We saw it right here. This is one of those nuances to the W, right? It's an ugly looking W because it did come up, came down, and it took that low, but just enough to liquidate you, right? So that's very, very, got to be very, very careful. Right now, we're in this little range, and I think we're going to be in this little range for a little bit. But I like to say when it comes down here, that's when we probably want to take a chance to go long, right? We are going to see that. I guarantee you, we are going to see US swing price up here, but I don't like this pair. This pair ranges too much to even look at that. Right now for this week, it's not setting up to do anything. All right, everyone. I hope that was good. I hope that was really well. Hope you guys took some good notes. Hope you got some good setups. I hope it helps you with your trading plan. I hope it helps you with some of the things that you were looking for. If you're using our EG triple dot trading systems, go down to the 1 hour time frame, 1 hour, 30 minutes, 15 minutes, right? In that direction. Don't look at the 1 minute, 5 minutes, and 15 minutes. You don't want to do it that way. You have the top-down analysis that we looked at. We have the overall market bias of what's going to most likely happen within the next week or two. Now, as you get into your individual trade setups each day, you're looking for that bias, but you're looking at a 1 hour time frame. You're looking for the 30 minutes, you're looking for the 15-minute setup. If you're trading indices, go down to the 5 and 1 minutes. You're trading it day by day, right? Now, if you're looking for the major crosses and you're looking for a predictive analysis, please come to our trade management. We're looking for come to our live trade room coaching students. You guys get, Tuesday, Wednesday, and Thursday. We're going to do it this week, Tuesday, Wednesday, and Thursday. It'll be at 7 o'clock, Tuesday, Wednesday, and Thursday. I'll make sure I set that up in the community. For everyone else, you guys are free to come in to our Wednesday live trade room session. If you really want to see what we do, you really want to see how we get to an opportunity where we can fine tune our entry to it's almost to where it seems like we're giving away a cheat code, then you want to come and check that out and see what we do and how we do it. And we look for a handful of major pairs that are dollar moving pairs, crosses, and we look for some really, really good setup, and you'll see it from a predictive high and predictive low, something you might want to look into, maybe something you want to be a part of in the future. Okay, I'll make sure this recording is up and available. This was a good top-down analysis to set you up for the week. Other than that, thank you for showing up. Appreciate you guys, and recording will be up in the community. I will make this one free for the month for the public. Other than that, hope you guys have your top-down analysis. Okay, see you later. Bye-bye. Yep, thank you, Amy. Thank you, Jack. Awesome. Glad, awesome. I hope everyone has an opportunity to see it. Cool, appreciate it. Okay, bye-bye.